In this video, I'm using the NQ instrument on a ninzarenko 26 chart. I'm currently applying the default parameter setup, which we've found to perform very well for both trend following and reversal trading styles. Of course, you can always customize the settings and choose the chart type that best fits your personal trading approach to achieve optimal results. In a market full of risk and volatility, it's never easy to tell whether the market is ranging, trending, or about to reverse. Many traders struggle to decide when to enter, hold, or exit a trade. That's why our system was built, to help you read the market more clearly, recognize when a trend is strong, when a reversal might occur, and when to trade in line with the trend. With this tool, you'll trade with greater confidence and full control over every decision. In this video, V-Elementra will help you answer 5 essential questions every trader faces. 1. What is the current market momentum level? 2. When momentum is strong or extremely strong, what is the best entry signal to avoid missing opportunities? 3. When momentum is weak, which signal is reliable enough to justify an entry? 4. During trending phases, which type of signal delivers the most effective trades? 5. When the market turns choppy, which signal helps traders stay profitable? Now let's move on to the first question. 1. What is the current market momentum level? When the market makes a strong upward or downward move breaking out of the cloud, do you consider that to be the strongest momentum phase? In reality, nothing is ever certain, but V-Elementra helps you identify the true strength behind that move. When momentum is strong enough to push price outside the cloud, it indicates that price may continue moving powerfully in the same direction. On the other hand, when price rises or falls but fails to break completely through the cloud, it signals that momentum is still weak and the market remains indecisive. Finally, when price cannot even enter the cloud, it shows that momentum is at its weakest, making it harder for the trend to continue. Next, let's move on to question number 2. 2. When momentum is strong or extremely strong, what is the best entry signal to avoid missing opportunities? When the market shows extremely strong momentum, price tends to move quickly with very shallow pullbacks. If you wait too long, the opportunity might be gone. In this case, the early pullback signal is the best choice, allowing you to catch early entries right as the trend breaks out strongly. On the other hand, when momentum is strong but not extreme, price often makes a deeper retracement before pushing higher again. That's when the deep pullback signal is preferred, helping you enter at a better price after a clear correction. So, depending on whether momentum is strong or extremely strong, V-Elementra will adapt to deliver the right signals, helping you trade confidently, safely, and in harmony with the trend. Next, let's move on to question number 3. 3. When momentum is weak, which signal is reliable enough to justify an entry? When market momentum is weak, it means price lacks clear direction. The trend is not strong, and buying and selling pressure are nearly balanced. During such phases, trading with the trend often carries higher risk due to increased noise. That's when the R reversal signal in the V-Elementra system becomes valuable. The R signal is triggered by detecting volume delta divergence, which helps identify trend exhaustion and potential early reversals. This allows traders to take counter-trend setups near the cloud zones with higher accuracy and better risk control. Next, let's move on to question number 4. 4. During trending phases, which type of signal delivers the most effective trades? When the market shows a clear trend, the trend volume lines, both thick and thin, can help us anticipate the next move of the trend, whether it's likely to continue or start reversing. When the trend volume lines are thick, it indicates that the current trend is strong, so it's better to avoid reversal trades. Instead, focus on early pullback signal and deep pullback signal to trade in the direction of the trend and take advantage of the strong momentum. On the other hand, when the trend volume lines are thin, it suggests that the trend is weakening and momentum is fading. This is when you may consider reversal, R signals, as the market could be preparing for a potential shift. Next, let's move on to question number 5. 5. When the market turns choppy, which signal helps traders stay profitable? When the market becomes choppy, meaning price moves within a narrow range without a clear trend, trend-following signals like early or deep tend to lose their accuracy. In these conditions, the market is often noisy and uncertain, And this is where the reversal R signal in the V-Elementra system truly shines. The R signal is triggered when volume delta divergence appears, revealing the imbalance between buying and selling pressure and signaling a potential shift in market direction. When price moves into the cloud zone, this signal helps you identify early reversal points with higher confidence, allowing you to stay profitable even in low trend or sideways markets. Beyond counter-trend trading, the reversal signal is also an essential tool for trend-following traders. It acts as a smart exit signal, guiding you to secure profits and manage risk as soon as the trend shows signs of exhaustion. In other words, reversal doesn't just tell you when to enter, it helps you know exactly when to exit, giving you the precision and control every professional trader needs. Join the Hello Win Forum, where NINZaFamily traders come together to explore valuable trading knowledge and products. Click the link in the description to get started. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.